Welcome to the StockOptionAssassin.com's free Trade of the Week video. My name is Eric. Today is Friday, March 7th, 2014. In this week's video, we're going to take a look at some of our previous plays, how we handled those, and then we're going to look at a couple new plays that we're looking for next week. Now, typically, I like to give these Trade of the Week videos on Monday. However, this Monday kind of threw a curveball at us, as over the weekend, last weekend, as you probably know, the Ukrainian-Russian situation sort of flared up. We had a kind of a gap down here. You can see that these candles right here. We had this gap down. And then Tuesday, we had a complete reversal. We've kind of just grinded higher the rest of the week. Although today, we're starting to get a little bit of a pullback. Basic candlestick stuff tells us that we're overextended and at the top of an uptrend, and we have some indecisive candles, and we're getting a little bit of a bearish engulfing candle. Not, super strong, but nonetheless, there is some, looks like a little bit of profit taking happening, or at least some, a little bit of a fade here. I'm not going to make too much of this yet. This is still a very bullish trend. If you look at the weekly chart on the left, you can see that the weekly squeeze has actually started to re-accelerate to the positive side. I will say, though, that we are at the upper Keltner channel here, and that we could get any kind of pullback at any time. Pullback wise, if we do pull back next week, we pull back into some of these moving averages. I have a 13 EMA at the 20 and 50. Any kind of pullback, I'd start looking for buying opportunities because the trend is not broken, and you just gotta, this thing could keep going actually. So I think at this point, a little patience is sort of warranted. I'm kind of waiting for the pullback. And I wanted to kind of go over a few plays today because we didn't do the Trade of the Week on Monday because we were kind of waiting to see what happened. So let's take a look at a couple of our previous plays. So first, I want to talk about Target. This was something we put out a few weeks ago where I'd done some Fibonacci work. You can go back to the video and watch this, where we ended up entering this right around the 55 and change mark. We ended up holding through earnings, and we had a nice move up, and we kind of pulled back. And basically, we kind of got the target. We got back to the $62 area, which is where the bottom of these candles are, and we're actually kind of pulling back. So I played this with shares. We talked about this with our members a little bit. I did not buy options. I ended up just buying the stock in this range. It was right around, early February. It's right around the 55 and 55 half, somewhere in that area. We held through earnings, got a nice pop. And now I have a stop at $60. So that was sort of my expected move. I took a little bit of profits there. If we pull back and start to consolidate here, we could make a run for the 200-day moving average up here, which is around 65 bucks. But I'm keeping a $60 stop on there for now, and then I'll reevaluate later. So that's something with Target. So that worked out pretty well. The other one is CRM. We entered, this was a few weeks ago, and earnings came out. We kind of took profits along the way. We took most of the profits off the day before earnings, and then the day of, I actually held on to a couple contracts. We bought some calls, and I trail stopped, and I got stopped out at the open because this thing kind of tanked. What I like about CRM now, and you can kind of keep this on the radar for next week, is it did kind of sell off. It came back. It's having a pretty big dump today, but we're back at the 50-day moving average. I think we're going to find decent support around, I'm going to call it 58 bucks. And we have a squeeze developing here. So right now, CRM is sort of consolidating, if you will. It is on the bearish side. But if we get down to 58 bucks, or even down this pivot, 57 bucks, I would look for a potential reversal. Now, I'm not going to say I'm going to buy at 58. What I'm looking for is, once we get to that zone, I'll look for a reversal pattern. If the squeeze starts to turn back up, then we would look for a move back up to the moving average here, which we have the 50 here. We look for a move back up to 50, and the 50, and potentially up to the early 60s, low 60s. So I like CRM, but we did take our profits before earnings because it's always kind of risky. Obviously, hindsight tells us that was a good idea. And so this week, what I'm looking for next week, today's Friday, well, I'm looking at a couple things, and here's a few plays that I like. I like Hewlett Packard here, HPQ. We have a daily squeeze that's forming. Everything says bullish here. We're at a previous resistance point. We're kind of consolidating underneath that. So what I'm looking for next week is, depending on what the market does, if the market pulls back early next week and HP kind of maintains this $29 level or $29.50, I would look to buy some calls, April calls, and something probably like the $30 calls right at the money. We got plenty of time. and I would look for a breakout. If this squeeze can turn and fire long, I'd look for a breakout above this $30 level, and we can get back up to the low 30s. This pivot is right around 33, so I think there can be a pretty good boost here depending on what the market does. So that's on the radar. Another one we've been looking at is Amazon. Amazon, you can see the weekly chart, it kind of tanked on earnings, came down to the lower Keltner channel here, kind of back at the mean. The daily squeezes fired long, and we're kind of consolidating sideways underneath the 50. So if the market's going to continue its march higher, then I'm going to expect Amazon to play catch up. We have some bottoming candles here around 382. Gap fill is actually around $400. So I like potential call buys on Amazon. Or if this thing continues to trade sideways and the market does get going, you could simply sell something like a 370, 365 put spread and look for that to kind of that to expire worthless. Now we're kind of at a tricky time. We have 14 days left for March expiration, so that's actually a good time to sell, but we really want to see how next week opens up. So let's go back to the market here. If next week we have a 1 or 2 day sell-off, then I would look to sell put spreads, potentially on Amazon, potentially buy calls on HPQ like I talked about, but I really want to see how next week opens up. So patience is warranted. If some of this stuff starts to look like a buying opportunity, I'll look to do the trade of the week early next week. However, it's probably not going to be on Monday, but look for something midweek from me. So you guys have a great weekend. I hope that helps. If you have any questions, let me know, and we'll see you at the next update.